Good day, everybody. It's on the half hour. My name is Dr. Leon Perlman. I'm head of the DFS Observatory. Welcome to yet another in the series of webinars from the DFS Observatory in New York. We've got CITI at the Columbia Business School in New York. Today's topic is ID and authentication systems in digital financial services, presented by Paul Makin. So, very quickly, today's agenda, just a quick overview of the observatory. Then we'll start with the live webinar, which is about 45 minutes. Then we're going to do two quick polls. Straight after that is the live Q&A. So send questions to the moderator and the host as it goes along. Then there's the optional live quiz, which starts just after the Q&A ends. 10-question multiple choice quiz. So you should have the quiz link in your email already. So if you don't, check your spam folder. If not, email info@dfsobservatory.com and we'll push it back to you. So the quiz link is live for 2 hours only for certificate purposes. After 2 hours, the quiz results won't count. So you have to do it within 2 hours post-webinar. Just a bit about the DFS Observatory. It's housed, as I said, at Columbia Business School. It's funded by the Bill and Melinda Gates Foundation. And some of our activities, we have quite a large legal and regulatory database on digital financial services. Very welcome to take a look at it. We're building some model laws and regulations of DFS. We have webinars and roundtables, and next week is the annual DFS and Emerging Payments Summit in New York, June 8th and 9th. If you're in New York or surrounding, you're very welcome to come or fly over. A number of publications on the website, do commentaries and analysis of new laws and regulations, and collaborate with a lot of the participants in the DFS ecosystem, industries, regulators, standard setting bodies, etc. So here's an overview of the webinars, and at the end you'll see a list of upcoming webinars, so you can pre-register for those. And as I said, you can also earn a certificate of attendance. You need to attend 6 webinars and get 60% for each of the post-webinar live quizzes. Again, the quiz is only live for 2 hours post each webinar. So you have to concentrate on the content that's coming up to pass, and it should be a breeze. So about Paul Makin. Paul Makin is very well known in financial inclusion and DFS circles. He's head of financial inclusion at Consult Hyperion in the UK, where he's broadcasting from. He's been active in the specification, development, and operation of DFS services in emerging markets since 2004, and he's one of the co-creators of the M-Pesa mobile money service. So with that, I will hand over to Paul Makin in the UK.
Hello, everyone. Hi. Oh dear, my camera's just come on. That's kind of disconcerting. Am I supposed to have my camera on, Neil?
You can, as you wish. You can switch it off.
I'll definitely switch it off if I can. Oh dear. Yes, so I'm, as Dan said, I'm Paul Makin. I'm going to talk today about identity and authentication systems in DFS. DFS being the general term these days for mobile money, digital financial services, and allied technologies. Moving right along, I'm sure that people are aware that the whole world of digital identity has its own set of terms, its own vocabulary. So I think it's useful to just quickly go through some of the key elements of that vocabulary before we carry on. So first of all, obviously there's an identity, and that can apply to either people or to organizations. So any legal entity that is distinguishable from others can have an identity. An attribute is some element of verified personal data linked to an identity. It might be your passport number, it might be your gender, or it might be also anything similar. And a credential is a digital certificate or equivalent that can be used to assert ownership of an identity or an attribute. So that's what I present when I want to use my digital identity. A relying party is the term that's used for an organisation or another entity that wants to determine my identity. So perhaps it might be a bank, for example, as a relying party, and they want to establish an attribute, first of all, that I own this digital identity and that this is my name. And it's interesting that in general, the current focus is almost exclusively in one direction. My bank wants to determine my identity. I don't necessarily have the ability to determine that the organisation I'm dealing with is indeed my bank. An identity provider is an organisation or some other service that can provide me with a digital identity and help me to manage the attributes around that identity. An attribute provider is an organisation or a service that can verify and assert an attribute. So an organisation might be an attribute provider. It might also be a relying party. And in that case, for example, a bank might issue me with an identity derived from a national identity service, and it then relies on that identity that's been issued, in which case it's both an attribute provider and a relying party. Level of assurance is one that we'll come back to later, but it's one that's often overlooked. There is an international standard definition of the level of assurance that is associated with the digital identity. And finally, in this much abbreviated list, we have the federated identity, which is the ability to take an identity which is established in one context and assert it in a different context. So my Facebook login credentials are then used to log into another service, for example. So first, what do we mean by digital identity? So as a general definition, a digital identity is a set of credentials combined with a means of authenticating that the entity asserting the identity is the person whose identity was proven at the time of creation of the digital identity. By which I mean a digital identity isn't just the attributes, it's also the how do I prove I'm the owner of those attributes or the entity that those attributes relate to. So for example, a digital identity might allow me to assert that I am Paul Makin and to enter a PIN or present a biometric in support of that assertion. And it's the combination of two that make up a digital identity. The means of establishing a digital identity can vary. So on the left, you have a static approach, which is the traditional top-down approach taken by governments and others, and often referred to as a sovereign identity. Or you can take a more dynamic approach, built up from social network contacts and reputation built up over time. And that can often be the basis of what's increasingly being known as self-sovereign identity. And that, I think, is of increasing interest in the world of DFS. So, to expand a little more on the way that you can establish an identity, that we have either the top-down, which is a core digital identity, which is usually created on behalf of a government, and it's a formal establishment of identity, and it usually forms part of a national identity scheme. And the key examples that I've highlighted here are Aadhaar in India, Nadra in Pakistan, and NIMSI in Nigeria. That is not the only way of doing it. You can do the bottom-up approach. So this is a digital identity arising from the needs of a particular sector. It's usually the banks that are behind something like this, but it can also be a method of giving control back to the individual, so self-sovereign identity. But there are conventional mechanisms which use the bottom-up approach, which are accepted by governments and by the financial sector. And here are the examples I've picked out are BVN in Nigeria, Secure Key in Canada, and in the UK, Verify. So each of those is an identity which is not established in a top-down manner by government. It's derived from, in the case of Verify and Secure Key, by credentials which have been issued by other organizations such as banks or through credit history or social activity or through the ownership of existing bank accounts. Moving on. So the desirable characteristics of a digital identity. So the important point is that not all digital identity initiatives are suitable for use with digital financial services. So those that are focused on preserving privacy, and we see a lot of these, particularly in the area of self-sovereign identity, they can often have the consequence that the legitimate needs of financial regulators and others around anti-money laundering, beneficial ownership, etc., cannot be met. And one of the properties of a digital identity that is more suitable for use by the financial sector is that it's unique and traceable across all transactions. So, for example, it can be used by multiple financial institutions and used to identify an individual. And therefore, they're very useful in the establishment of services such as credit reference services. And third, there are digital identity systems out there that require that every customer uses a smartphone on which to run a client application that interacts with the service. And what's more, all such interaction has to be online, which isn't always possible. So what do we really want? Well, first of all, the digital identity must present a unique ID. And that then makes it a foundational identity service, which can be used to develop richer financial services and thus to support economic development, because it can be used as the basis of a reliable, better quality loan portfolio by financial service providers. It has to offer strong authentication to tie the person to whoever is presenting the identity back to whoever originally registered with that service. And we're seeing biometric authentication as increasingly desirable. And the little picture there is a card that MasterCard and I believe Visa as well are piloting in sub-Saharan Africa, specifically South Africa with that card, where the fingerprint reader is actually integrated into the card. And the reason for this is that upgrading all retailers or payment acceptance points to accept biometrics is seen at this stage as expensive. So integrating it into the card instead is seen as an interim solution, which allows biometrically authenticated payments without having to upgrade the merchant estate. So coming back and to one of the core concepts, this is the level of assurance. And level of assurance is, as I mentioned before, the measure of the quality of a digital identity. And it is a combination, therefore, of a measurement of the quality of the original identity proofing steps, the steps taken to verify the identity at the time of registration. And secondly, the robustness of the authentication credentials, so the quality of the biometric that's been captured, whatever other authentication credentials are in place, whether there's a two-factor element to it, etc. And the level of assurance goes from level of assurance 1, which is essentially a reflection of that minimal confidence, a self-asserted identity. So it might be I turn up and say that I am Paul Makin, but I keep on turning up every week and saying that I'm Paul Makin, so that over a period of time you tend to believe me. It's only really suitable for when minimum risk is associated with the identity. And there's no real requirement, no specific requirement for authentication mechanism, just that there must be some basic authentication mechanism, such as every time I turn up. It looks like the same person. Then at the other end of the extreme, we have level of assurance 4, which is extremely high confidence in an asserted identity. So this is used when a high risk is associated with erroneous authentication. So this is the highest level of entity authentication assurance, and it requires in-person identity proofing, for example, for the very first stage of the creation of the digital identity. And in my experience, very few banks anywhere in the world are able to achieve level of assurance 4, or to be frank, even level of assurance 3. There was a survey done fairly recently where certainly the banks in the UK were found to really never go beyond level of assurance 2. And level of assurance 2 is where the use of second factor authentication comes in. So there's potential scope. There's a lot of potential scope there for increasing the reliability of the digital identities that are out there already. So I'd like to talk about a few example identity services now. Sorry, jumping ahead there. And the first of these is India. And everybody, of course, has heard of Aadhaar. And Aadhaar is a hugely successful initiative that's been undertaken under the auspices of the Indian government. And it's now the foundation of many governmental and fintech initiatives in India. So every resident, or pretty much every resident of India now, has a digital identity biometrically authenticated by a centralized service. And you have to be impressed with Aadhaar, registering 1.25 billion people and capturing for each of them 10 fingerprints and 2 irises. It's a quite remarkable achievement in coming on 10 years. The service is biometrically authenticated online. There is no card that is issued. So you get your Aadhaar number, and when you want to access a service, you present your Aadhaar number and present your fingerprint and authenticate that online for access to the service. And if, for example, at the time of registration to open a bank account, the UIDAI, the organisation that manages Aadhaar, will return certain attribute data to the bank, such as your name and address, to facilitate opening the bank in a process called eKYC. You don't have to be, as I mentioned, a citizen of India to register for Aadhaar. You merely have to be resident. You're supposed to have 2 breeder documents. Breeder documents being things like passports or some form of paper identity documents, birth certificates, etc. If you don't have the 2 breeder documents, then you can be effectively sponsored by your neighbours, provided neighbours are able to provide the breeder documents themselves and are willing to say that, yes, you are that person. And in that way, the registration process has been extremely efficient. To further stimulate the development of services built around the Aadhaar number, UIDAI launched an open API called the India Stack, which enables the integration of the services into mobile apps, with the data securely stored and provided by the UIDAI to authenticated apps. So India Stack consists of, foundationally, the Aadhaar authentication, and then there's eKYC. There's an electronic signature service called eSign, so you can sign up for services remotely. We have the API and privacy-protected data sharing within the stack, all made even more effective through the Prime Minister's PMJDY bank account initiative. So everyone in India has a bank account, and it can be linked to the Aadhaar number, which allows services such as routing of payments via Aadhaar numbers. It's quite a remarkable initiative. And various other countries have looked at it and have independently or with assistance or with advice come up with their own version. Entirely separately, of course, we have Pakistan with NADRA, which again is a remarkable initiative. It applies to every citizen of Pakistan, and that's an extremely important distinction. You have to be able to demonstrate that you're a citizen of Pakistan in order to register for NADRA. It's a digital identity service again. A digital identity is actually issued onto a smart card, the CNEC, which is carried by the citizen in order to allow them to biometrically authenticate their identity, even offline. There is also a centralized service, which again retains the biometrics. And this offline point is really quite important. It means that you don't have to ensure good quality mobile data service across the country. A citizen can present their CNEC card and prove their identity just merely using the card and an offline biometric authentication service. This has been extended even further. So in order to register a SIM now, or in order to acquire a SIM, you need to register it for using your mobile phone, and you have to present a NADRA ID in order to purchase that SIM. So every SIM is registered against a NADRA ID. Importantly, it's not necessarily the NADRA ID of the user themselves. It could simply be the head of the household. So it's not uncommon for a head of house to have a number of voice SIMs and a number of data-only SIMs, which are used by all the members of his household. But the more general point is that this means that every mobile phone can be tied to a digital identity. Moving on again, the third example country is Nigeria, with NIMSI, and of course BVN as well. So NIMSI is reported to have been based on lessons learned from both NADRA and Aadhaar. So it's a card-based service with a lot of services built into the card, and the biometric data is also replicated as a centralized service. It didn't translate as well as expected to Nigeria. The last time I looked, which was a month or so ago, there were, I think, 1 million NIMSI cards in circulation, which is a fairly small number for a country the size of Nigeria. The financial sector in Nigeria were obviously very keen on using NIMSI in order to simplify the KYC process for onboarding their customers. And with the delays in NIMSI, I think the banks essentially said, well, we need to do something about this, and we need to create our own digital identity. And the net result was BVN, the Bank Verification Number. This was under the auspices of the central bank, the CBN, and they did it in collaboration with NIBS, who operate one of the switches in Nigeria. It's, again, a biometrically authenticated digital identity service, but it's based on the data that is known by the banks. There is no card involved. Essentially, the way the BVN was issued was that each bank carried out their own deduplication process and issued a temporary BVN to each of their customers. And then this was provided to CBN and NIBS, who between them did a cross-industry deduplication process so that you can be certain that a BVN is unique across banks and that all bank accounts owned by any customer within Nigeria has only one BVN associated with it. And that's obviously has all the characteristics of a digital identity service without being a national identity service. BVN also underpins the mCash mobile payment service. So anyone with a BVN can use USSD to open a mobile money account without further authentication because it relies on the KYC process that has already been carried out by the banks. NIBS reports that the BVN will be migrated into NIMSI when that service is ready, which will actually be a challenge, I think, because unfortunately the decision was taken during the development of BVN to capture a different set of biometrics, or to use a different algorithm anyway, and to capture different attributes from NIMSI. So it won't be a simple process to migrate BVN directly into NIMSI, but I'm sure a mechanism will be found. So, having covered the core identity elements and talked about a few existing services, I'd now like to talk briefly about a number of emerging identity solutions. So the first of these is Mobile Connect. Mobile Connect has been developed by the GSMA. A great deal of effort has been undertaken, and it allows customers to create and manage a universal digital identity via a single login solution controlled via your mobile phone. It is a major undertaking by the GSMA in collaboration with many of its member mobile operators. It has the objective of establishing secure digital identities and consented data sharing, and it uses the security offered by the SIM. It is quite a remarkable model. It actually works in both directions. So using Mobile Connect, you can link it to another identity provider to share elements of your digital identity in order to create a bottom-up identity, for example. And this is actually being used within the UK. So mobile operator registration details for subscribers are contributing to the gov.uk verify model for a bottom-up digital identity. And then in the other direction, SIM registration, for example, is being used to allow the Mobile Connect identity to be sufficient to log on to other services. And this is being used already, piloted in Pakistan and other countries. It can offer remarkably high levels of confidence in the identity. Depending on the implementation, it can be anything up from level of assurance 2 all the way up to level of assurance 4, and it's one of the few models that can actually achieve that. Moving on, next to talk to another model, self-sovereign identity. In this, the self-sovereign identity, it refers to the case where an individual or an organization to whom the identity relates completely controls, owns, and manages their identity. There is no identity provider. There's no external party who can claim to provide the identity for you because it's intrinsically yours. So you are your own identity provider. But a self-sovereign identity done well doesn't ignore conventional identity documents. It can include attributes and endorsements from traditional identity sources, such as passport providers, the purpose of which is to strengthen the level of assurance associated with the identity. So in the context of self-sovereign identities, conventional identity providers don't vanish, but instead of providing you with your identity, they're instead verifying and attesting to the validity of some aspect of your self-asserted identity, which is an interesting subversion of the approach, I think. Moving on to briefly talk about blockchains for identity. There are a range of solutions for this emerging at the moment, and I think it is an area of significant potential. In fact, in the short to medium term, I think that this is probably the biggest opportunity for blockchain, or distributed ledger technology, blockchain being a particular subset of DLTs. So we have these self-sovereign identities implemented via via DLTs, such as Sovereign being a non-profit foundation, and really quite an interesting, intellectually interesting possibility anyway. And then we have identities as smart contracts, which is, again, quite intellectually satisfying. There's Tradle and others who are using sovereign identities and KYC sharing, so allowing you to effectively put your passport data on the blockchain. And then there are people like Showcard who are putting government-issued identities and integrating with Mobile Connect to again, use DLT to enable that data to be shared with multiple parties. I know there are many more. I have a list of, it must be in excess of 50, but they fall into generally these four groups, and the names chosen there are merely representatives of them. So moving on to some broad conclusions here. So although top-down identity services are generally the focus of multinational organizations and governments, they're not always the best fit. They can take many years to establish. It's not unusual for a national identity service from scratch to take somewhere between 8 to 12 years to be fully deployed and operational. And given the focus on KYC and identity, particularly in the financial sector, there needs to be an interim solution. And I would argue, therefore, that bottom-up solutions, similar to BVN in Nigeria, they should be explored and potentially embraced, provided, of course, that care is taken to ensure that they can migrate with and interoperate with the National Identity Service as it comes online. Initiatives such as Mobile Connect, the various services which are emerging around DLT, these all demonstrate that non-government solutions exist. They can be extremely agile, and they can meet the needs of individuals and reliant parties. Mobile Connect is, I think, particularly indicative of this. There's a range of commercial markets, commercial service providers who are increasingly looking at Mobile Connect and embracing it as a means of establishing their customers' identities. There is a lot of innovation happening in this space at the moment. It needs to be monitored closely. In another year's time, it'll be a whole different set of players that we're talking about. But without appropriate policy initiatives by governments and supervisory bodies, we're not going to get anywhere. So there does need to be appropriate attention paid by those bodies and a willingness to adapt to changing circumstances. And with that, I'd like to conclude and perhaps open it to questions.